Yo, what's up guys? In today's video, I want to go over just the charts, a bunch of setups to get you guys familiar with these breakout setups. These are going to help you out a lot. They're going to really get you just a good understanding of how you should be marking out your breakouts, entries, the good setups from the bad setups, and basically the whole nine. So I want to go over a couple setups that I've taken within the past month or even the past couple weeks. So number one, I want to go over Tesla. This was one of my biggest trades. I made about $25,000 on it. I think maybe a little less than that, actually. I think it was like 23, something around there. But I made a lot of money on this breakout. The point is the technical analysis, though. So let's dive straight into it. You can see that if we just look at Tesla, this was, creating an insane base for a very long time. You can see, just look at this on a weekly time frame. The stock Tesla has been consolidating since May, June, July, August, and the start of September. So you can see, a good, if we go to the monthly time frame, 4 months, almost 5 months of consolidation, right? So when you see a stock, especially like a high volatility stock, like Tesla, obviously everyone knows Tesla is a momentum name. You can see that it absolutely rips. And when it consolidates like this, you just know that a lot of shares are being bought up. A lot of people are taking profits. A lot of indecision is going on right here. Obviously, buyers are not in control, nor are sellers in control. You can see we're in a super, super tight range. Now, when you see that, you guys have to mark out the clear resistance. So if we go on the daily time frame, you could see, like, where is the resistance at, right? You can see we have heavy resistance at this 356 level. You can see on the side of my screen over here, 356, and we've rejected off of this area, 355, 356, multiple times. You can see we have the trend line, and then we also have the rising support right there. So looking at that, you see a very tight setup, and you realize, like, okay, like, when is this going to go? Right now, you don't want to predict anything. You don't want to buy it right here or hope for it to break out. You want to wait until you see a clear breakout over this level. Now, that's why, a lot of traders lose money, is because they predict too much. A lot of traders don't have a real system. They just try to hope for a breakout, or they hope price bounces here, rejects here. That's not a strategic way to create generational wealth inside of the stock market. The way to create generational wealth is just by sticking to a system, and we've been over that, guys. Stick to the same thing every single day. Do not predict, just make sure that you're reacting. So you can see if I put this in replay mode, what happened? Obviously consolidated a little bit. 1 second, right here. So you can see this day we actually faked out. Funny thing is, I actually took Tesla stock on that day when we got above this resistance, and it faked me out really, really hard. I actually lost a little bit of money. I think I lost like $1,000, $2,000 on that. But you can see my risk management is pretty good. And obviously when I take it for the breakout and I hit this breakout, I'm making 20K. That's because I still had full conviction in the setup. The consolidation was super tight, and this is still something that you want to take. Just because you get stopped out one time doesn't mean that you shouldn't take it again. Fake outs are going to happen. It's a part of the game, and you have to learn how to accept it. A lot of people get frustrated and just don't know how to accept their losses, so they end up doing something dumb, like over trading too much that, over trading setups that aren't even working. They'll get faked out on Tesla, and then they'll be like, oh man, like, I need to make my money back. Let me just go to QQQ and take calls or puts for no reason, right? I'm sure all of you guys have done that. Trust me, I've done it as well. So you want to be systematic. You can see, after that fake out, we had 2 days of consolidation. And then this day, we saw another breakout. I took it on this day around this area. If we go to the 5-minute time frame, you can see as soon as it broke over and then had a pullback. So I actually entered on this pullback right here. I'm pretty sure it was literally this pullback right there. The breakout line obviously would have been over the previous day high, which is right there. So you can see we broke over that level, pulled back. I entered right here with my stop loss back into the range. And you can see it ended up ripping the whole entire day. The stock actually followed through that day. So if we go to the breakout level, right here is where we would have entered. That's where our position would have been. You can see followed through the breakout level, which is right here. Obviously, you can see like our line, obviously, right? You see breakout level. I just want you guys to have it super clear, right? This is breakout level, right? So I entered right around there. You can obviously see we followed through, and we had a really good daily close. So this was why I was convicted on this stock. I actually held a big position. That's how I was able to make 25K, because I didn't just trim most of my position. I actually held it because I was very convicted. You can obviously see like a weekly breakout on this. Like, man, this has a lot of room to go higher. And look what it did. Went all the way up to, 444, and even went higher. So took the stock 1 day of a breakout, and you can see the stock like absolutely ripped on these days. Like, it was a beautiful follow through. If we use the date and price range tool, like, This day it was up 7%. On breakout day it was up about like what, 6%, and then it gapped up again another 5%. So you can see like the stock went parabolic. If we go to just like a 30-minute time frame, like this is the breakout I took, right? Took it right here on this day, swung it the next day, absolutely ripped. The third day, absolutely ripped, and you can obviously see off of that momentum, I'm obviously scaling out of my position, and then I had to sell it on Friday, which was this day. I had to sell it on the 19th. So, yeah, beautiful breakout. I hope you guys are understanding, you know what I mean, just like what I'm really looking for. You can see Tesla just made a huge base right here. You have to understand that. So, you see, you know what I mean, the support right here. We're supporting price, making higher lows, lower highs. And you can see we have that clear resistance right there. We broke over that. I swung that trade. And obviously, what I'm doing is scaling out with the momentum. So I talk about that a lot. As, you know what I mean, it breaks out on that first day, you can scale out like 20% of your position. If you're up, you know what I mean, 50 to 70% around there. And then let's say, you know what I mean, the next day we absolutely rip. You're up 100, 120%. Bang, I'm scaling out even more. Mind you, I made 700% on this breakout. So like, that one breakout that I lost back here, whatever I lost 30%, 20%, and you can see I'm making 700%. So if your winners are not making you that much money and your losers are losing you more money than your winners are making you, you're doing something wrong. It's either you're trimming too early or you're not letting your stocks run long enough, right? So you want to be holding these stocks as long as possible. Realistically, as long as your expiration is. And then that's what I did. I would have held the stock even longer. You know what I mean? You could see it just kept going higher and higher. And obviously I had to sell on the 19th because that's what my expiration was. I only picked, I think, like, what, 2 weeks out or a week out. So it was unfortunate, but it is what it is. You know what I mean? And now you can see Tesla's sitting at about right here, ended up breaking out again, and I took this and now just folded super hard. So this is a stock that, you know what I mean, isn't super tight right here. You know what I mean? This isn't really a stock that I would look for this upcoming week. You want to see stocks that are really, really tight at breakout level. You can see this is just choppy consolidation, not something that I would look for. But hopefully you guys understood that Tesla breakout. I want to go for the pony breakout now. Where did I take this? I took this a long time ago back here. I want to show you this breakout. So you can see, let's look at the stock pony. Obviously, this isn't like an insane rally momentum stock. You know what I mean? You can obviously see it's coming off of a downtrend. But if we go to like the weekly time frame, look what's happening. You know what I mean? We were coming off of that weekly downtrend, looking back at it on a daily, you know what I mean? We're regaining some momentum off of these lows at like $3. So you can see, obviously, some good news came out on this stock, made a big move up, making higher lows, lower highs, building some nice resistance, right? You can look at it like that, or you can just look at it like this, right? You can see we have this support right here, and then we do have our resistance right there. So it's never going to be perfect. You can use that high, you can use this high. Realistically, you would want to use that high because you don't want to anticipate it. So if we look at this high, you know what I mean? We see the breakout, right? Let's fast forward to one more day. Bang, right? You can see that breakout right there absolutely printed us. And you can see, look at that breakout. Just really like eye it down. That's a good breakout, right? You know what I mean? It's making a big move up off of these lows. You can see the stock made about a 100% move up, obviously. Huge move up because it has a high ADR. And you could see it was consolidating. 1, 2, 3, 4, 5, 6 days of consolidation. Getting tight, holding the 10 EMA. Let me delete that trend line right there. You see how the EMAs ended up crossing, and we're just holding the moving averages, surfing it, and then boom, we see a lot of momentum through those highs. Let's see where our entry would have been. So you could see previous day high is most likely where my entry would have been, but you could see we had these highs over here. So I probably would have waited for those highs to get broken. You can see we see a lot of momentum off of that. You can enter off of that. It is pretty high. Obviously, the risk to reward isn't the best. So you can either enter off of that or wait for like a small pullback. Let's say you entered off of the pullback right there. Let's just say you entered off of the pullback, your stop loss back inside of the range. That would have been a good play. Now, a lot of the times, you know what I mean, you may be scared to take a setup like this because you're asking like, well, dude, that's pretty high up. You know what I mean? We're pretty extended from the moving averages. Usually you would want to wait for something like this, you know what I mean? A pullback and then for it to continue to break. But sometimes, guys, when we get momentum over our levels, you're not always going to see a pullback. That's just how it is. You know what I mean? Pullbacks are not always going to happen because what is momentum? Momentum is momentum for a reason, and buyers are buying it up, institutions and banks, and they're not allowing those crazy pullbacks, right? So always realize that breakouts are breaking out for a reason. They want to go higher. So yes, focus on risk to reward, but also don't, you know what I mean, stay too patient, because if you stay too patient, sometimes, you know what I mean, you may miss out on a stock. You can see it didn't even really pull back. It just kept ripping that whole day. Now let's see, obviously, if you would have entered off of that 5-minute close or the pullback, let's see what it would have done the next day. You know what I mean? Let's put this in, it's already as fast as it goes, but speed it up. You can see the next day, we absolutely ripped, right? So you could see after that breakout, we ripped, went sideways again, ripped, went sideways, ripped. So if we just look at this on a daily time frame, look at that breakout, guys. Let's delete all of these green lines. You could see like this is an amazing breakout, an amazing follow through. Every single day was green after we took that breakout, or if we would have taken it. So you could see it's just absolutely rising. Now, I don't really remember what it did right here, but what I do see, does anybody see something, right? We're extended, right? You can see the moving averages are pretty far behind. If we look, you know what I mean, the 10-day moving average is about 40% away. I'm guessing we're going to see a pullback. Yep, so, okay. You see how we're pretty extended, right? Up here, this is where you guys want to be taking profit. Stocks are not going to rocket ship launch up forever and ever and ever. They take profit. Obviously, the banks, everyone's going to be taking profit up here, especially at higher time frame levels. So you need to make sure if you're up 200, 300, 400%, you need to make sure that you're scaling most of your position off. Now, that doesn't mean trim it all and just take everything off, but it definitely means, you know what I mean, take a pretty big position off. You don't want to be holding a full position all the way up at these highs. So after you see that big momentum move, you want to make sure you're scaling out, because when we're extended, it's going to pull back to what? The moving averages. Did it ever break below the 10-day? No, so you should not sell it. What happens? It goes even higher. You know what I mean? Let's see what it does. There you go. That's where you would have exited the trade, because you can see it's consolidating, but it's losing momentum. You can see it finally closed below the moving averages. That's when I would have been out, and you can see ended up breaking down. There's no reason why you want to still be in a stock that's doing that. You know what I mean? You want to scale out of momentum, take your profits, you know what I mean? Hold it on the pullback, hold some runners, went higher, whatever, you're scaling more, and then once it starts breaking below the moving averages, you're out of the trade. It's simple and it's easy as that. So hopefully you guys are paying attention to the pony trade, because that's actually a really good setup. I want to talk about a setup on Chipotle. I think we went over this in the last video, but this was a stock that I'm actually currently in this stock. So you can see this is not a momentum trade either. You know what I mean? This is a lower ADR stock. Now, I know obviously I don't really like to trade stuff lower than like 2 to 3%, but this is a stock that you can see that actually was doing pretty good. Like the stock Chipotle was actually having a lot of momentum. Like on the monthly time frame, look how this stock has been performing like since 2020. You know what I mean? Stock has been going higher and it's been looking pretty good, but you could see like as of now, we're actually gapping down and ripping off of bad earnings, right? We had bad earnings back here, I'm pretty sure. You can see we gapped down off of earnings. Or I don't even know if it was bad. I just think price reacted bad to earnings. So you can see we have a gap right here. And we actually gapped down into this support, right? So we gapped down into the support. We're below the moving averages, right? You can see that we're creating a nice wedge, a nice base right here. You see how we gap down, we continue to go lower, and now we're just making higher lows and lower highs, just consolidating, literally moving sideways, not making lower lows or higher highs, simply just going sideways. What do I see? The day before I took the breakout, I see a lot of momentum right here off of these lows, right? So that's showing me that a lot of volume is stepping in, and you can see a lot of buyers are approaching right here. Next day, I see the break over my trend line, over this base. I took it on the 5-minute. Actually, it wasn't on the close. I think it was as soon as we got momentum. So you can see on this stock, right, as soon as we break, we start breaking, but we show a pretty not the best sell wick, right? You can see we didn't really break over that previous day high super clean. It kind of closed right at us. So I was iffy about that. Didn't enter. I saw a huge pullback, which I'm glad I didn't enter. I would have been in heavy drawdown, right? Maybe not heavy, but I would have been in a little bit of drawdown, which isn't ever bad, but it's always great to, you know what I mean, try to get the best entry. And you can see, pulled back pretty heavy. We closed with a huge hammer candle right there, started seeing some momentum. I did not wait for the close. I actually entered like right at breakout level with my stop loss at low of day. And you can see the stock absolutely ripped. I'm currently still holding this stock, and I'm targeting this gap. I do have November contracts on these, so I'm going to be targeting that gap at around like 47 to 50 bucks up here. And we'll see how this plays out. If it bounces off this support level and goes higher, I can make a lot of money. And it looks like the stock could perform pretty well. So as of now, really good breakout. You guys saw the momentum through the level and the continuation. What you're looking for is the continuation. You see how we didn't just chop around a breakout level and just like sit here and like go back and forth? That's a lack of just like volume. You don't want to trade stocks and hold stocks forever that are lacking volume. right? Most of the times, if a stock is going to break out, it's going to break out. And it's going to show you that it's breaking out like this. Now, if you do see a stock that's consolidating, don't just exit for no reason. Obviously, stick to your plan, stick to your stop loss. But you want to understand that if a stock is going to break out, like I said before, it's going to break out. It's going to show you that volume. So make sure you're paying attention to volume at all times. Very, very important. I want to go to another stock that I traded before. It was SMCI. Actually just had a good breakout. I didn't trade this right here, but I want to show you this breakout. So you could see SMCI, you know what I mean? Not like the craziest stock this past year, but you could see it had a lot of momentum in 2024, right? Absolutely ripped, pulled back, not the best stock, kind of consolidating. But you can see creating a huge base right here, right? Lots of resistance, huge base. And we have a gap to fill. That's one thing that you have to notice. If we look right here off of bad earnings, we have a huge gap that we have to fill. And what's happening? We're creating a lot of resistance at that gap at the $48 level. So if we zoom in right here, and you can see, right, one rejection right here, one rejection right here, rejection, rejection. This day, got above it with a lot of momentum. So what you're going to be looking for is over this high right here. You can see over that high, we're going to go to the 5-minute time frame, and we're going to find an entry. Right, so you can see market opens, we see a lot of volume, right? Now, mind you, we're below the breakout level, so you're not going to really be taking it yet. You want to wait until we get above this high, remember. So you can see lots of momentum. We close. You could have entered there or off of the pullback and then the rip, right? That's also another good entry. You can see, let's say you entered right there, stop loss back inside the range. Beautiful, beautiful breakout, absolutely ripped, and it closed that high of day. So if we look at a daily time frame right here, look what it's doing right now. I'm going to exit out of replay mode. This is the current market. It's still holding up super high up here. Yes, we're above the moving averages. We're pretty extended, but this could easily do something like this and continue to go higher and higher. So this is something that you want to hold. As long as we're holding the moving averages and looking like we want to go higher, especially in a bull market when QQQ and IWM, especially with these low cap stocks, if we are going higher, you never want to just sell your stock just because it's pulling back. Pullbacks always lead to new highs if we're in a bull market. So never get scared off of a pullback. Never sell too early, because you might have been up 100% up here and sold your runners, and let's say, oh, I'm just going to take my profits, and then it does this for the rest of the week, right? You don't want to be that guy. So make sure that you're holding your stocks. I think it's very important. Let's go over the stock Rigetti Computing. You can see this was a beautiful, beautiful breakout right here. Leading sector as well. You can see quantum computing has actually been performing very, very well. If we look at, you know what I mean, IonQ, this has been ripping. QBTS, let's look at this, has been ripping. QUBT, right? So these are all quantum computing names inside of that sector. Now, if we go back to Rigetti, which is RGTI, you could see that this was the strongest one out of all of them. Why? Because we didn't really sell off. Let's look at IonQ. See how IonQ had a huge pullback? Let's look at QUBT. See how QUBT is pulling back, not showing strength? But let's look at Rigetti. This is a stock out of all of them that are actually holding up. Now, you might ask me, Johnny, how do you know that it's holding up? Let's look at it. Well, it's holding the moving averages for one. It's creating a really nice flag up here, making higher lows and lower highs, getting really tight, and not having a sell-off. You can see it's holding that 10-day moving average. Really, really nice. If we go to something like IonQ, you see how this broke below the 10-day and then started showing weakness right here? That's not a tight setup. What is a tight setup that is showing that buyers are still active is a setup like RGTI. You can see higher lows, lower highs, tight consolidation, declining volume, right? See the volume down here, declining volume, and then on breakout day, lots of volume. The day after, the continuation day, lots of volume. So let's see how we would have gotten an entry on this day, right? Rigetti, let's look at it. You can obviously see I wouldn't have waited for previous day high. I probably would have just waited for the wedge. So you could see if we just look at this, you know what I mean, getting a lot of momentum. 5 minutes after market open. So the first 5-minute candle didn't close well. I wouldn't have entered on that. Pulled back, showed a lot of momentum. Buyers stepping off of these moving averages. Bang, I would have entered right there. You can obviously see, oops, clicked the wrong tool. You can see I would have entered right on there. Stop loss low day or back near support. And you can see absolute ripper, like insane ripper. The stock ended up going what? Let's say it went probably about like 14% on the day, 15%. So the stock was up 15% on this day. And then the next day, what did it do? Gapped up, or didn't gap up, started moving up, opened, and then absolutely ripped again. And now this is where the stock is standing. And it just looks like it can go easily so much higher, right? It could have a mini pullback and just hold the moving averages and continue higher. And these are the types of stocks that you want to hold, guys, because it's very important to realize leading stocks are going to continue to lead, right? Holding leaders like this, or let's say if we went into the energy sector, a stock like BE, beautiful stock, you know what I mean, going higher. You can obviously see this is a stock you want to hold. ASTS, this is a stock in aerospace like Rocket Lab, right? This is a stock that you're going to want to hold because it's going higher, has a lot of momentum. But let's say a stock that I took the other day, Chipotle, this isn't a stock that you want to like be full size holding forever. And because it's just not a leading stock. Now, I think my thesis is very well on this. I think we could easily target this gap within the next month. So that's why I was decently heavy in it, because I'm taking a later out expiration. You know what I mean? So I'm taking the November contracts. We have a whole entire month and a half before my stock option expires, right? So if I'm taking a 2-week out expiration or 3-week out expiration, you know what I mean? Obviously, you want to make sure that you're scaling out on momentum. But I'm holding this. Now it's a break-even trade. You know what I mean? I'm not going to let this go back into this range and become a losing trade. If it doesn't keep going and going higher out of this range down here, and it doesn't reclaim, you know what I mean? Let's say if we go on a weekly time frame, if it doesn't start reclaiming these weekly moving averages, I'm just not going to, you know what I mean, hold it. There's no reason for me to hold it. I'm going to start scaling out as we go higher, and I think this could play very well. Also, if we do look at a monthly time frame, we're pretty extended from the moving averages. You can see like we had a huge sell-off, like at least from this high, like over 35% down on this past like what, 4 months, 5 months. Even from all-time highs, you can see like the stock is down 44% from all-time highs. So this is something where you can see it's a little bit oversold right here, bouncing at support. You could see we had a nice range down here, broke out of that. I think this has a long way to go higher. You can see like that was a really nice range break. I think that we could easily see maybe one more lower high, higher high, and just continue to go higher. So hopefully that makes sense. I'm going to go over one more setup with you guys. This was a really good setup. It was on actually Oscar. Let's check it out. So Oscar, really good range right here. If we look from these highs, we have a lot of resistance, right? So let's just look at it like this. Lots and lots of resistance right there. You can see this is a health stock, I'm pretty sure, healthcare. So you can see, look at that range. Let's look at it on a weekly as well. You see how tight this stock is right here? You know what I mean? Even if we look at it from down there, but I was looking at it at this high. So see how tight we are? And also, one thing I want you to realize before this explosive breakout, do you see how low the volume was, right? You see the declining volume down here. Let's look at that, right? So, oops, messed that up a little bit. You can see from these highs, you know what I mean, after we made a pretty big move up, we saw a decline in volume. Volume is dying out down here. Look at that. And then this day, over this high, we would have taken it. Explosive volume, right? So if we go on a 5-minute time frame, you could see over that previous day high, which is right here, right? We're always taking over that previous day high. You can see, look at the 5-minute close. Market opens, boom, big move up, pull back, whatever you could have entered off of either of these right here. Stop loss goes back into support, and you can see the stock absolutely ripped for the rest of the day, closing super bullish, and you can see this has a lot of room to take out these highs up here, right? So this is what we would be targeting. Remember, you guys are always going to be targeting previous like resistance. So see how we still have these highs that are sitting up there? Those are highs that are going to be targeted. Same thing with like this setup over here, right? You see how we broke out right here? What highs are we going to target? This high right here, this high over here, and then finally this high. What happens when that high gets taken out? We absolutely reject. So it's very important for you to take these targets and actually scale out of your positions and take profits, because your targets are your targets for a reason. Even if we look at this breakout right here, right? Let's just be super simple, right? You can see we have a lot of resistance right here. We break out. What happened? We hit this target. You're scaling out right there. We break out of that. Lots of momentum. You're scaling out up here, maybe at these highs or this resistance. So hopefully that makes sense. Make sure that you guys are taking these breakouts, being very efficient with your strategy, with your entry criteria, and also with scaling out. Don't get too greedy. Don't take profits too soon, but don't also let a trade ride forever. You need to understand when a stock is really overbought or oversold. Be aware of the market, analyze the market, and just be active every single day. I backtest every single day like this, and I go over these setups, and this is what builds confidence within the market. So I hope you guys enjoyed this video. Keep liking these videos, keep watching them. Click the link in the bio for the free Discord, you know what I mean? Show up and just put action in. I hope you guys are really enjoying this course. I love every single one of you guys. Peace out.